great point that you guys bring up. This is a spot ETF. These are spot ETFs that are trying to get approved here. And I think that that's significant, right, in terms of the flow dynamic, where we're talking about an asset manager like a BlackRock, 10 trillion. You're going to see, even a small amount of that flow, if it goes into products like these, it should have a significant impact on the price of Bitcoin. At least that's what, the bulls are hoping for. And that's how I think you can get to those prices that maybe on the surface seem a little extreme, right? Bitcoin, 200,000, 500,000, right? That's a big number, and it implies a very large market cap when you look at that asset alone. Yeah. But relative to other stores of value, other industries, I don't think it's that insane. It's certainly within the realm of possibilities. We've got a $3 trillion company in the form of Apple here in the US. The market cap of all of crypto assets isn't $3 trillion. So we'll see what happens, but this is a catalyst, and the institutional participation is certainly, a driver that we've been kind of waiting and hoping for, I suppose.
Love it.
Yeah. But if we throw up the next slide, I got a little bit of kind of market aware NSS here.
That's okay.
Awareness.
We know what you're saying.
Yeah. So this is the crypto market map I've started to put together, and what we're really starting to see, and this has been a key theme over the last month or so, is that there's this Bitcoin kind of dominance, this wrecking ball. And when we look at Bitcoin market dominance, it's up 51%. It's up a couple percentage points here from where we were last week. And what that means is that the market cap of Bitcoin as an asset is 51% of the entire market cap of the whole space, of all the tokens, at least those that are big enough, liquid enough to really be meaningful to track. And this is important to pay attention to because, I think price action-wise, it signals what's happening in the market, where you have the SEC coming out and saying these tokens are securities in our view. So people are getting out of those things, out of that risk, and into something that's a bit more of a safe haven, regardless of how volatile Bitcoin might be itself. It's a bit of a bid to safety in the market, and that's been the key theme that you've seen. So you've seen that relative performance of Bitcoin versus other tokens like Ethereum or Solana. You can see that more pronounced on obviously a 1 month basis, but that's been the trading theme. I think that's going to continue as well. If you were to see a larger risk-off move in the market where you get a bit of a bid in the dollar, that might be a headwind. But it's just important to realize that, if I want to be in crypto right now, I think this specific moment, the trade is to still be on a relative basis long the large market cap, kind of blue chip, and Bitcoin's certainly the biggest.
And that's not unlike the financial markets, right? When you look at the SPY or the NASDAQ, you have 3, 4, 5 stocks that make up 50% of it. And that's kind of what you're seeing here, is that Bitcoin is kind of your blue chip, your Apple, your Nvidia, your Tesla, Amazon, Google. That basket is kind of Bitcoin, and then everything else is just kind of the scraps that's left over I would imagine in the long term or on a short term look have higher beta. Just because they're lower market cap, they swing around a little bit more. But over a long period of time, if you're bullish on the space, you probably make bigger gains on something like a Bitcoin as kind of like the blue chip, the market.
You would think so. And what's interesting, or what will be interesting, I think, to pay attention to is whether that correlation between or among crypto assets breaks down at all. Because all you've seen before, to your point, is all up or down in the same direction. It's just pick your flavor. The only factor was beta or volatility relative to Bitcoin as like a benchmark. So we'll see if that continues. The really important thing I think for everybody to be aware of, though, is that volatility has spiked quite a bit in here. It's not historically at some sort of record high. It wouldn't be at a 100 IV rank, but we were in the low 50s last week when I did the show. The implied move there at that point was under $2,000. Today, we've got a 30-day implied vol of Bitcoin at 65%. It gives you almost a $3,000 move off of these levels. To the upside, and when you look at the charts, if we look at the charts, I'm not sure.
Yes.
But
we like charts.
we are coming up to a point where, you could see a little bit of a run. Maybe if we could break through here, we haven't seen that yet. We've been up here a couple times. If we could break through here, maybe you can run to 40. We'll see. But what we've got on the screen right now is just implied vol that I was talking about. So you can see a bit of a spike there, but not necessarily where we've been, year to date. We've seen some higher levels.
Yeah, and what's interesting about Bitcoin rallying from 25K to 30K very quickly, and then you see an IV 5-day change of 18% to the upside. It is one of those products where when you get big rallies, you're going to see volatility increase most likely, as opposed to decrease, like in something like the S&P.
It's a call skew environment, no doubt, for sure.
Absolutely. One other thing I want to point out before we jump into today's topic, if we have time, is again just that concept of the Bitcoin wrecking ball. When you start to price all these other tokens in Bitcoin, that becomes your base currency in the same way that you would look at, the dollar pair and you would trade something there. I like to look at it this way. And so what you have here, just some longer term moving averages. This is that pair, and you can see that there's a bit of a breakdown here. There isn't anything that's overly bullish when we look at the Ethereum price versus the price of Bitcoin. Again, I think Bitcoin, and clearly for some real reasons in the market, is going to outperform, at least in the short term. So that said, I want to talk about decentralized exchange with
Let's
you guys
do it
today, if we have enough time. This is a topic we've covered before. Have you guys ever used a DEX, a decentralized exchange? Are you guys? I just don't know what you're.
I've stood over your shoulder and watched you do it.
Okay.
That's my experience. So I haven't directly used it, but I'm familiar and I understand what it is. But I haven't used it yet, which is probably a telling sign of how we're so early, so to speak, is like the guy that like trades every single day hasn't even touched it yet. Maybe we're real early.
That is the theme. You can probably play some sort of drinking game with how often I say that on the show. But and that's what I'm curious about, really. It's more so for me, some market research here. We're building a wallet. We're going to launch a feature that'll allow you to connect to everything that we've talked about on the show here pretty soon. But I also have no idea. I'm in my little world. Who else is participating? Have you ever done anything on a DEX? Are you familiar with like a Uniswap or anything, Mike?
I am familiar, but I have not participated.
Okay, cool. Yeah. Well, this will be fun. I won't spend too much time on the educational stuff. What I want to show is just the interface and talk through some of these things. But really quickly, for everybody that's not familiar, DEX is a decentralized exchange. This is a crypto exchange that's permissionless. It's peer-to-peer, runs on a blockchain, and removes the majority of intermediaries that you would think of exist in the market today. Doesn't necessarily mean it's better or worse. It's just a different way. It is more automated. It's basically you're interacting with code instead of some centralized entities. So what that might look like then is that I, Trader Ryan here, I used to have a mustache. I come to the decentralized exchange. So what does that actually mean? I go to the website, I click on a button that launches an interface, I connect my self-custody wallet, and now I can interact with this system. I can interact with the website, really. And what happens there is any tokens that I might hold in self-custody on or in my wallet, more so at my blockchain address, I can swap those for something else on that chain. So if I'm on Ethereum and I have Ethereum and I want to buy something else, I can go to a DEX, sell my ETH, and buy the other token. It's contingent on there's liquidity there, and we'll talk about how that works in just a second. But that's what's happening. I'm just going to the computer basically and making a trade. I don't care who it's with or what's on the other side of that.
Yeah.
I'm interacting with a pool of capital.
Yeah, it's almost like I think of it like being an ATM, and you're getting like an ATM fee for just distributing whatever currency it is, ETH or Sol or Bitcoin or USDC, and you're just kind of transacting, and you're taking these little, you're realizing that fee rather than intermediary or middleman or something like that.
Exactly. And that's how it works when you provide liquidity to the exchange. So on one hand, I can come to this application and I can swap tokens using simply just my self-custody wallet. But I can also participate in a decentralized exchange in a different form, which what you just brought up, Nick, I think is the coolest aspect of this, because you're able to provide liquidity to this protocol to facilitate this process and participate in that form, whereas you can't do that today, right?
Yeah.
We'll use tastytrade as an example. I can only trade there. I don't get to make markets. Put it, technically speaking. I guess you're providing a bid or an offer, but you're not a market maker. You're not a liquidity provider in that sense. Here, you as an individual or an entity, an institution, you could do that, and you simply just provide liquidity by depositing tokens that you have. So if you have an Ethereum token, you have a USDC token, you can provide those to a pool, and then you will generate the fees when other traders come to the exchange and they buy or sell one of those tokens. Automatically, you receive the commission that normally would be going to a company like a tastytrade or another brokerage firm, bank, financial services company. So it removes the intermediary, but it allows anyone to participate in the system. Not necessarily as an intermediary, but as a facilitator, which is pretty cool. So all of that said, and I know it probably leaves a lot of questions, which maybe we can just kind of jump into.
Yeah.
If we go to the next slide here, this is what that looks like. For me, it's always helpful to see these things. So this is Uniswap. This is the biggest decentralized exchange by volume, by total value lock, participation, you name it. It's the biggest. And here are those two different interfaces that you can interact with. And these are things that you're going to be able to do, again, with the tastycrypto wallet in just a couple of weeks. So you can swap on one hand. I've got ETH. I want to swap it for USDC stablecoin. I could do that. I'm going to pay a fee. I'm going to pay a network fee. But providing liquidity, you can see on the other hand here, you have a pool of capital that you've essentially deposited or allocated to this. We've got 13,000 in this example. And then you have fees that you generate as long as the price of Ethereum, in this case, stays between the range that you can see at the bottom. So this is from a little while ago, but we've got a range of about 1750 and 1950 with a price of 1866. So as it trades within that range, that's the period or range where I'm providing liquidity, and that's where you're going to be generating fees as simply someone comes to the protocol and they deposit ETH, to use that term, they remove USDC in the sense that they're selling ETH and buying dollars. You're facilitating that process. And so that's one of the coolest things, I think personally, that you can do in DeFi today.
But there is, so the one thing that I think I understand is that you these price bounds are kind of where you are long or short, so to speak, of ETH, right? So like as it goes up, you're selling more.
Correct.
You're losing that ETH, you're gaining dollars. As it goes down more, you're losing dollars, gaining ETH. At a certain point, let's say if Ethereum went to 2,500 here, you no longer have Ethereum. You have dollars.
That's exactly right.
And so there is, I don't know what word to kind of put in this context, but there is a risk of, people might think, oh, I'm just in here and I'm just like taking fees just to facilitate. But you're participating as a market maker would, where at a certain point, you're short. And at a certain point, you're long an asset that's going down, and you have to understand that, part of being a market maker is taking that other side, and at a point you get to that point, and you don't get your ETH back, you get dollars back, which you might not want.
That's exactly right. Yeah, so there's a couple of risks here, and I think it's important to point these out. And in some ways, it's very similar to options trading, where we'll use some of the same terms. So two different risks. Let's first talk about the upside risk. The upside risk, what's also called impermanent loss, is really that opportunity cost. Here, I'm participating in this way. My alternative could be that I just hold ETH, and to your point, Nick, big move, 2,500. I make a lot of money if I hold a lot of ETH at these prices and it goes to that point. So there's this opportunity cost, because what happens exactly as you described, as more and more people are coming to the exchange and they're saying, I want to buy ETH, they're taking that ETH, not necessarily, that's not tangible, but they're taking the ETH out of the pool, they're putting dollars in the pool. So you have defined pool of ETH and dollars, you're getting to that point where my pool's filled up with dollars only, no more ETH, and I no longer participate on any upside price action if, in theory, I were to sell at those higher prices. So that's a lot like
Selling a strangle.
call.
Yeah.
Or selling a strangle in this.
Yes.
Yeah. To some
The
extent.
whole thing is. So on that side, it's the short call. You're capping your upside. You can always push that button, pay the network fee, rebalance, do this all again, or simply just buy ETH at that point.
Yeah.
So maybe you can time it. You could hedge it with options. There's a lot of things that you could do, but that is your upside risk. On the downside, the opposite is true. Someone's coming to the pool. Many people are selling ETH. They're putting ETH in the pool. They're taking dollars out. The price of ETH versus dollars is falling. At a certain point, all I have is Ethereum. If Ethereum goes to zero, I'm wiped out. Short put.
Yeah, exactly. So it's really cool to
It's
see
literally a strangle in the
It's a
sense of you're
yeah.
collecting fees in the same sense as collecting premium.
If it stays in the middle, you make the fees.
Yeah.
Yeah, it's a short vol trade, right? Which,
Yeah.
getting back to, I think, everything that we've talked about on this show and that Tom and Tony have preached and what Tasty Trade is all about, not so much probabilities here, but being the market maker, selling volatility. You want a ton of volume, obviously, but you don't want these big outsized moves. There are ways that you can hedge those outsized moves. This is not super easy to do today. Hopefully we can make some of these things a little bit easier for people to access and to participate in. But the opportunities, I think, and I kind of refer to these as on-chain opportunities, are significant. So just to give you guys, put a little context around these numbers up here, and this can be wildly variable, but when you see big moves in the market, you see a lot of activity like we have recently, this tends to just really kind of grind some fees out for you. And so right now, the last that I looked, this was running at about a 50 to 60% yield, assuming that you were able to do the same thing every single day. And that's on, the 1,300 or so in capital. The other thing that's interesting about this is if you're bullish ETH or any other crypto, you're receiving fees in that crypto too. So you have some fees in US dollar, in this case, or US dollar stablecoin. You have others in ETH. So there's risk to the downside, but if it goes up, you can see kind of an outsized move in your fees. So a couple interesting things there. If anyone wants to participate in this, I would encourage everybody to, or not so much participate in it, but if they want to learn more, I would encourage everybody to join our community, which if we jump to the last slide here, doing a couple things. We're trying something new. So Tasty Crypto is on Discord. We have a server.
Awesome.
Please check it out. I think there's 100 or so in the community today.
Nice.
Great conversation. A lot of people that you might see some familiar names from Twitter that are in there. Great ideas. We're adding channels. We're trying to bring some research to it, trying to do some content in the space as well. Really unique stuff there. And then if you'd like to follow us on Tasty Crypto, I think it's one of the best places to get all of the, I wouldn't call them so much the headlines, but a lot of great market awareness if you're interested in crypto, we're putting out on the Tasty Crypto Twitter. So I'd encourage everybody to check that out.
Love it.
Really awesome stuff. tastycrypto.com if you want to sign up and get it on the wallet as well.
Yeah.
That's true. Yeah, good point.
Yeah, that's the flagship.
I have my secret phrase in my wallet, which is probably not the best thing. I need to get it a little safe.
I definitely would, because if you lose your wallet, then not good.
And now someone in production is going to grab my wallet, it's the whole thing.
Hey, don't give me any ideas. I sit right next to you. I know where you put your wallet.
But yeah, I appreciate that. We've got the Tasty Crypto app on mobile, and it's also a Chrome browser extension. It's still, we're not fully done with all the features that we're adding, but we've got a couple things that are coming soon. I know we've talked about transfers as well on the show. So if everyone wants to check it out, let us know what you think.
Perfect.
Awesome. Fantastic. Well, thank you for joining us, Ryan. This was a really awesome conversation. We should do it every week.
Thank you,
we'll
guys.
see if we can make that happen. We're going to take a quick little 90-second break, come back with a market measure with Anton. I think we're looking at some 0-day option stuff, strangles and iron condors, IV changes, really good stuff. So stay tuned for that. You're listening to Tasty Live.